Hello YouTube, we need to talk because the SP 500 chart is breaking and we need to know what to do now. Right here, as the chart is telling us, we need to be very mindful of this. We noted that going into the FOMC, normally we go up. On the day of the FOMC, normally we go down. And then we go up as well. Next day we go down. Instead, we've gone down, down. So now that we are battling for these two key areas of 380 and 370, and where are we? Roughly in the middle at 375. This is really important because as soon as we poked below 390, we went to 380 like a magnet. After we lost 380, where did we go? Basically 370 like a magnet. We have to be very mindful of that now. And I want to leave you with a note here. It is called patience. So the saying I like to use is that volatility or there being big movement in stocks is generally going to be a trader's paradise, but it is going to be an investor's hell. So figure out whether you want to be a trader or investor right now, because as we know, right now the bulls are fish swimming upstream. This is a very hard job. Not that they can't do it, not that there aren't benefits to doing it. It's just a tough job. And we're going to talk about exactly what that means right now. So if we know that looking here at the daily chart, we've done almost the opposite of what we normally do. We went down, big down, and then down more. We're like starting to really break down here. Yes, we're breaking down on volume. So not only do we have our bearish pattern technically, but the volume confirms it. For me, that is like a really strong case. We can also note that we are closer to an area of support than not. That's at about 370 right now. So whether or not we need to actually hit the psychological 370 to bounce, or if we're here, we defer to what we would normally look at. And for me, the last 10 minutes told the whole story. So right into cuck o'clock or 350 when they normally start manipulating overtime, boom! All right, they crank a staircase up, elevator down. They took it down 0.8 in 10 minutes. Or where were we? We were green on the day until the last 10 minutes. At 350, we were higher than we opened, and we were looking pretty good. I'm going to show you here with a different perspective. So we're going to take our horizontal ray, and we're going to snap this now. So snap, we're going to snap the second one here, and then we're going to answer the question about what we need to do right now as we look forward to tomorrow, the weekly candle close, and everything else. Wow. Oops, not a 15-minute. We want a 10-minute. Ah, beautiful. A red dildo. Yes, that is the opposite of a greenie. And what we can note here is that we were actually higher than we opened at the high of the day, and then we weren't. Then we were boom, right where we closed. That was powerful, right? That's a flex. And there's a reason for this. It's called why not? We're playing chicken, and if the one team wants to bid it up all day, sure, give us bids. We'll sell right into those. That's what the bears are saying. Thanks for the bids, boys. We're going to crush them. Our puts are going to get minted, and that's normal scraping when they get through the option. So what we want to do right now is look at our weekly chart. And what's so important, and for your action right now, going into the end of the week, you have to realize, like, the last time we poked below 390, 380, we dove down 10 points. If we poke through 370, which is only about 1% lower, where do we get to? We get to a new low of the year, 362. That gets us like where people are going to start panicking, capitulation even. Are you ready for that? Are you an investor? And again, I said it's an investor's hell, but a trader's paradise. If you're not holding overnight, oh man, these could be some beautiful moves. They could grow your account if you know what you're doing. So the question is, are you prepared if we lose 370? If you don't know what you're going to do and you're trying to wing it, you're probably not going to be happy with the outcome. If at least right now you mentally rehearse and think about, well, what if we go down? What if we go up? Into today, into tomorrow, into the end of the week, into next week. Why? Well, we're pretty close to support at 370 here, but what if we lose that? Well, then we got to find more support. And this is so important because tomorrow, Jerome Powell talks. He talks again at 2. So if what we heard, if we got the opposite of what happened between March and yesterday, which was normally up, up, down, we went down, a big down, and then down more. We tracked the last one here, though, negative 0.7, negative 0.8. So yesterday, we focused a lot of time on, well, who cares what the Fed said? What happened? Well, in December, when they met last time, big down. In March, big down. And then in June, big up. So this was the only time it was mispriced. And if the only time it was mispriced was when the wasn't happy with the outcome. Is Jerome going to not say anything? Is he going to reassure us of what we heard on Wednesday is true? We should trust him and his path? That's what really matters. And we are going to be live for the final hour, so come hang out with us for the final hour. That's me, Justin, right here too. We'll be streaming for the final hour, and that'll probably be like a really spicy close. I want to see what Jerome says too. You should be finished. We're going to wrap it up. We'll walk you through all that. So again, do this now. And if you're on the flip side, if you are currently bearish, at what point do you start covering? Again, we're right near here, the next level of support at psychological 370 and where we actually started and where we actually found support on the channel, on the lower end. So are you going to cover if we hit 370? What happens if we get back above 380? Are you going to start? What are you going to do? Instead of trying to wing it, you need to have the patience to make the plan now and then respect it. If that means walking away from the screen, which is what I did for the large part of today, it means how am I going to mess up if I'm not at the screen? And I know the story. I want to short, but I don't want to short the low of the week. That's kind of silly. Scrape off some pennies. I don't want to do that. So I walked away. Anyways, if you want to be an investor, so we talked about how volatility is an investor's hell, but it is a trader's paradise. So the investor's hell is if you're trying to be a stock picker. And being a stock picker for the last 3 months, which is when the market started tanking, let's zoom out for 1 second here. So if we remove all this stuff now, and we ask ourselves, well, what's a 3-month chart? A 3-month chart smooths the data out even more. Massive shooting star. But we opened and we're closing negative 0.8, which means that as of 3:50 today, or 10 minutes before the close, we were unchanged for the last 3 months. You bought SPY, you didn't lose anything. You lost 0.8. Wow, I lost 0.8. Is that really a big deal? But your green trade went mega red. That's a popcorn trade if you've ever needed one, right? You were up by, I don't know, like 50 points, and then boom, you were not. You are back to getting your money back, and now you are red. However, does it feel that way? Does it feel? I don't know. Everyone's like, oh my God, how was Tesla green? Well, who cares why it's green or why it's up? It is up. It's worth 900 billion, 904. If you pick Tesla for the last 3 months and through all the volatility, Twitter, whatever, Elon, you made 21%. Wow, I got the annual returns for the S&P times 2 in 3 months. That's like pretty damn good. I thought Tesla was overvalued. If you bought Apple, up 9. If you bought Amazon, up 4. So if you bought these ones here, yes, even with us going up and down, you made money. However, are you smart enough to know to buy Apple instead of Microsoft or Google? If you aren't, and you bought them equally, you're zero, right? Plus 9, minus 8, or minus 11, you're at 0. You made nothing. Is that what you want to be at? That's what SPY did. It did nothing. Let's look at QQQ, or the Qs. Down 21 cents. Again, you did nothing. So if you can't stock pick, you're like, I like Microsoft and Apple. Boom, I made nothing. If that pisses you off, well, what happens if you start losing now? And what if you bought NVIDIA instead of Tesla? Well, if they were equal weight, you made nothing. But you're like, man, that NVIDIA stinks. I should have just bought Tesla. Yes, because this market is difficult. We are those fish swimming upstream. This game is normally very difficult. And now it is increasingly difficult. So when we talk about the last soldiers falling, that is the Amazon, the Tesla, the Apple. So yes, we're in a bear market. Yes, it was a bear market bounce. But until these last dominoes fall, or the last soldiers, this is just easier than looking at the charts. We do that all the time. So let's move forward to the next thing here. Even before we look at the charts, when we look at this here right here, the bear market targets, maybe not all in 2022. And I shared these back in January, even in December, I think. If you think about, okay, we're currently at SPY 374. Well, yes, but if we're zoomed into only the daily chart or the hourly chart, we could be missing a big part of the story. We note here that 374 is below 378, so we're below 2020 high, and we're battling for 2021 low. That's correct. We went below the 2021 low. So let's look at this chart now. Let's look at the 12-month. Wow, bearish engulfing. Yep, bearish engulfing at the low. And the close for the previous candle, delete SPY. That's not good. This is a pivot. And look at the volume. It's only September. This gives me an eerily similar feeling to ARK when I said, the volume's like not all that big. And then, whoa, on a 12-month chart, it fully puked and that volume is impressive. That's the word I'll use. Impressive. So that's what gives me the shivers here a little bit. I'm like, wow, this is like eerie. So if we start going lower, we go into that. What if we lose 370? If we go to 360 in a couple days, maybe one day, maybe next week, are you ready for it? If not, do something now. Start going downstream or just relax, right? Raise some cash. I'm not a financial advisor, but man, make sure you get some sleep at night. That's so important. Why bull or bear? Bear case is strong, bull case is not. All the surprises were not really surprises, but now the market is pricing them in, even if not fully. And then we'll look at my notes. I got 2 more quick things to look at, then we're going to sign off. So the fundamentals, check. Technicals, check. Psychology, check. You can watch the weekend video if you want more notes about how we got to here. If this is all working, we don't have to really spend too much time looking at the charts. We know they're bearish. We know they stink. We know the bears are in control. Technicals, volume, all confirm it. I want to leave you with one last thing, though, because I saw a big clue. The market was going to go up, even though it didn't quite hold. We're going to look at crypto. So here we're going to look at Ethereum, just because Ethereum is just, it moves more, to be honest. It's just more amplified, so it's more obvious. And when I look here, still recording perfect. I'm going to throw the VWAP in. And now we're going to look at the VWAP, and we're going to look at the 50 MA. So I'm going to hide everything here. All we're looking for is the orange line and the blue line. So going into the FOMC yesterday, they were both at about the same spot. We lose them, boom, massive plunge, right? Boom, 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 all the way down, massive volume. Then we reclaim the VWAP, crypto goes up first, all the way to the blue line. S&P follows, cool. Power slam back down to the VWAP, hammer it up. Dip buy, up. Dip buy, up. And then we puked it. So we followed the puke here. Sorry, there's the puke. There's the puke. And then we bought it up, got back to the VWAP. Ethereum and crypto were still higher. S&P's not. So it's been tracking most of it. And the reason I say this is because the same thing happened. We're at the highs right now. And for Bitcoin, it's basically around 20K. It's just below it. 19, 20K, close enough. Looks the same too. So it looks the same, and it did the same thing. VWAP 50, over the 50, hammered out, dip buying. This is important because the pattern is a dub. It's a W. And on the hourly, which again is a low time frame, if S&P repeats that, oh man, that would be max pain for options tomorrow if we got a dub. So if you want to know more, I encourage you to tune in for the final hour tomorrow to go through that with us. If not, watch the video that queues up right now for my deep thought, my weekend thoughts, and how exactly we knew we were going to be going lower this week. Thanks so much for watching. Look forward to seeing you tomorrow.